If you want higher engagement, higher personalization, more actionable insights, and higher conversion from the listings on your real estate portal, then you should probably get in touch with our sponsor, PropTech. With PropTech, you can use AI to elevate your real estate listings to a level that you haven't been able to do ever before. PropTech's at the absolute cutting edge of what AI virtual staging can do for your real estate portal. Get in touch with Stefan. It's Stefan, Stefan at PropTech with 2x's.com. Tell him we sent you and find out what PropTech can do for your real estate portal. Now, on to today's news roundup with me and Simon Baker. Enjoy. Hello and welcome back to the PPW pod, bringing you news, views and interviews from the world of real estate online marketplaces and PropTech industries. No Edmund today, ladies and gentlemen. We are here for a news roundup, but I will be leading it. But we can't do a news roundup without the man, the myth, the legend, Simon Baker in the room with 1,000 hats. How are you, Simon?
I'm very good, Harvey. And I'm growing a beard today for some reason, which is unfortunately means my grey hairs are coming out. That means I must be old and wise. Anyway, I'm looking forward to this one. We've got some good stuff. Oh, even though we're not sponsored by them, I've got a big shout out to Apple. These new Apple AirPod 3s are fantastic. Not, I've already paid for them, so it's like I'm going to get a free pair. But they are fantastic. And what I find quite astounding is I've been literally walking down the road, leaf blowers or whatever's happening, and people think you're in a quiet room. It is absolutely astounding. I just got to say to anyone who's looking for who's got the old AirPods, get the new ones. They're great. Anyway, maybe Apple will sponsor us now. Not.
A bizarre introduction by Simon Baker. Let's get on with. Well, we've got a bit of waffle to get on with before we do the news. We've published quite a few of our interviews from PPW conference in October. We now have Andy Florence, Rich Hayes, and Haider Ali Khan from Dubizzle Group all published. We've got a couple more for you, so keep an eye out on those. Simon, we are already selling tickets for the Bangkok conference, but that pales in significance to the fact that we now have a 2026 location for PPW confirmed. Where are we going?
Correct. So, couple of things. The Bangkok conference is up and running, 18th, 19th of March, clearly in Bangkok. So if you want to get tickets, go to ppwapac.com, ppwapac.com, get your tickets. I think we've got like 2 or 3 left at a very cheap price, and the price will go up. Already got 30, 40 people registered already. So we are well ahead of where we were this time last year. So I'm expecting about 250 at that conference. And then we've just locked in the 2026 Europe conference. It'll be again in Madrid, and it's at the last week of October next year. We'll actually we're gonna put some tickets on sale, super cheap tickets on sale, probably on the weekend, and they're going to go out to those who went this year, because we always like to support those who support us. So you get first chance of grabbing those ultra cheap tickets. So I hope you do grab them when we launch the conference. So we're looking forward to seeing everyone again in both March and October next year.
Fantastic. Good stuff. A couple of people are asking, where are all the interviews? Where's the podcast been? We've been on a bit of a hiatus. We finished out season 2. We're preparing season 3. Going to give the podcast a bit of a lick of paint, maybe a little bit of branding. And we look forward to bringing you some industry leading interviews soon as we lead up to the Bangkok conference. Right. That's the waffle out the way, just 3 minutes and 20 seconds of it. So let's get on to what has been going on in the news this week and last. We'll start with a fun one because everyone's bored of Zillow at the top of the show. Don't worry, we've got some Zillow for you, but we'll start in Australia, where we've got a bit of a traffic spat, Simon. So Domain Group recently taken over by CoStar. CoStar loves investing money in traffic so it can boost traffic, so it can put out a press release about the good traffic. That's exactly what they've done in Australia with Domain Group. They hit record traffic in October, 55.1 million web visits across all their portals in October 2025, up 46% on the same period in 2024. However, REA Group has come straight back with a press release of their own, saying guys, you may have had the best traffic ever, but we're still accelerating into the distance and you're going to have to do a bit better than 46% growth to keep up with us. REA had 13 million visits in October, 69.3 million app visits in October, 15 million downloads. But here's where it gets interesting, Simon, and this is where I want to bring you in, is that session times on domain are less than half the duration of on realestate.com.au. REA said our average visit time is something about 28 minutes. In domain, it's about 13 to 15 minutes. So this isn't just quantity. This is also the duration of sessions that is shows quite how big the gap is between REA and domain at the moment. Simon Baker.
Yeah. So first of all, I'm glad to see we're still talking the same metrics we were talking 25 years ago. Okay. At the end of the day, it's number of sessions, number of visits, unique visitors, and time on site. All of those are incredibly interesting measures. However, the most important measure for an advertiser is simply how many leads were generated. And no one ever talks about that. Okay, not in a comparable basis. So great numbers. Honestly, it's great numbers for both of them. If you have to take a step back and go from a domain perspective, they were sort of wallowing, right? I mean, they've gone through a period of going to be sold. There was the delisting process. It was CoStar coming on board as owners and so on. So yeah, that tends to stagnate a business. There was some changes in CEOs along that way, and so on, and sort of was sort of in a bit of no man's land for probably a good 18 to 24 months. So the fact that they've now got focus, what this says to me is this is if I'm domain, this is great news. You've got focus. You've got CoStar now saying, right, we are going this direction. You've got your traffic up year on year, which means they're focusing on driving traffic. That's fantastic. And then secondly, 13 minutes. That's a pretty good session duration. Okay. Now, I'm not sure how they're measuring session durations these years anyway. So I'm not going to go into the details around that one. But I just think, they're all good numbers. And clearly REA being the market leader is they're going to find numbers in which they're materially better on, because I would have done the same thing when I was running REA. Okay. Someone comes out with a release, I want to find better numbers. So we expect this tit for tat. But what's clear is that both sites have got an engaged audience and are growing. Okay. And that is probably the most interesting thing out of this. Now, you put a question up here that says, how do you improve session duration? Well, session duration is all about engagement. And I think one of the ways you improve your engagement side is use products like PropTechs. Okay. I'm going to wind in our sponsor here because I think it actually makes a lot of sense. When someone goes and looks at a listing, right? Because what the most important thing is someone coming to a website, looking at a listing, engaging in listing, falling in love with the listing, and creating a high quality lead about that listing for the advertising agent. What portals do all day, every day, and have done for time immemorial. Now, to improve engagement, either you add more photos. Okay. Well, how many photos are you going to add? Already they've got 10, 20, 30 photos. B, you allow for better engagement with those images. And companies like PropTechs allow the consumer to see a room that currently exists, maybe with furniture you don't like, or maybe with a paint scheme you don't like, and you can reimagine it, either with your own furniture, turn around, take a picture of what you've currently got, shove it in the room. You can see, does my furniture fit in that room? Yes, it does. No, it doesn't, because most people, when they buy a house, are putting everything in to buy that house and bring their furniture with them. Or you want to actually think about, well, what would that look like with IKEA furniture? What would it look like with Roche Bobois or some other furniture company? Okay, and you can reimagine that room. That's where companies like PropTechs, lead to better engagement with a listing, and that improves overall session duration. The other thing that improves session duration is volume of listings. How many listings do I have in the market based on the conversation or the search I'm doing? Now, I reckon the third way that would improve session duration over time is going to be AI, and when people start having interactive conversations, I mean, like what they do on homes.com, right? Where you can have a conversation. What are you looking for? Okay. And that just starts talking with you. That takes time. It learns about you as a home searcher. Now, the other thing that if that negatively impacts session duration is how you find the sessions. Okay, so if you're buying a lot of cheap sessions using AdWords and so on, then you might have people just come, see a property, disappear very quickly. So that brings the average session duration down. So you have to look at the source of traffic around these websites, which I don't have in front of me, but I'm sure if anyone wants to go and check out SimilarWeb, you'll probably find an increase in the volume of traffic from, my guess is SEM
I mean,
and paid
I,
traffic.
I think it's a common theme for co-stars that they seem to be okay with buying what you'd perhaps call low quality traffic in order to boost the numbers so they can start the narrative. And then once they hit a certain threshold, they've found some nice updates to the platform, added a couple of things to play with. That's when they will pull back on the paid traffic and try and focus towards more organic traffic.
Yeah, I think so.
Um,
Although I do think that at this point in time, if you're searching for a home in Australia and you've not heard of realestate.com.au or Domain, then you've been probably living under a rock, okay, or being
Absolutely.
disconnected from the internet. So
Living off the grid.
yeah. So this is more about getting someone to switch or spend more time with you in that journey. That's my
Two
hypothesis
cents.
around that.
I mean,
Yeah.
it's a nice little segue there because the second story we have is combined with Domain. We're going to stick with Domain because in the press release that they put out about the increased traffic numbers, they said a couple of interesting things that I thought were worth discussing on today's news roundup, which is it's all about UI and user experience, which is something that we very rarely talk about on this podcast, but it's a deeply psychological and sometimes even emotional thing about how you design a website, how you design a user experience. Domain has taken the decision to remove all third party advertisements off its platforms basically immediately because they realized that it was turning into a clunky, distracting user experience. It means that people who are paying to sell their home are competing for space on the website with third party advertisers. And you don't want a diluted focus while you have someone browsing your website, right, Simon? You want them to be laser focused on finding what they can as fast as possible.
Yeah.
I think
And if
I
you
think it's a
think,
good decision by Domain is essentially what I'm saying, that
yeah.
stripping back
Well,
all this clutter, shall we say.
I guess the question comes down to how much revenue was coming from those channels. Clearly, if it's a material source of revenue for the business, then you'll think twice about whether you would turn it off. But if you're going through a sort of a rethink about the purpose of the site, taking away distractions, so whether it's bank ads or whatever, I think can certainly focus the mind on generating leads. And I think if you're in the number two position and you're trying to take on number one and you're trying to close that gap, the most important thing is that you're generating leads for the advertiser. And to generate leads for the advertiser, you need to make sure that anyone who visits your site doesn't get distracted by something else. And I think that's the first thing. And then secondly, if you go back and think about the mantra of CoStar in the US, where it's your listing, your lead, and they're very strong on supporting the agent. And given all of that, I'm not surprised they've said, right, we're going to go back to basics. Let's focus on building a site that is all around driving traffic. Now let's drive traffic to the listings, drive leads, show that we can, have a very high quality outcome, and that we may not have the same volume as REA, but we've got higher quality. And if you're going to play a game, play the quality game, because that quality game has then the capacity to differentiate yourself from the other players in the market.
Thanks for that. Let's head over to our next story. And we're going to have another number two trying to become a number one, because we are now moving over to France, ladies and gentlemen, where the new CEO, who is also the returning CEO of Bianici, has said that they want to take not necessarily significant, but a market leadership position in France against its main rival, Célogère, by 2030, basically. So fighting words coming out of Bianessi, Cyril Janin, who was brought in a year or so ago, maybe 2 years ago, maybe even three, I can't remember exactly off the top of my head, has left the business and been replaced by the original, I believe, founder as president, David Ben Basset. So we have the founder coming back into the business, Simon, and he's ready to try and turn Bianessi into a number one. Your gut instinct,
It's
Mr. Baker?
well, it's the same. But if you think about it, it's a similar story to Domain. Jason
Absolutely.
Pellegrino, who's the CEO there now, he was the CEO historically, had left. They had brought in a couple of one or maybe two, I think, temporary CEOs, and then with CoStar taking over leadership, he came back and joined. And it's a similar story here. A number, a challenger brand in the market taking on a market leader. Although we could probably debate Leboncoin versus Soluger in that market. And I think what this is about saying is that that David had built a really good business, had got really good traction, and if we go back to the basics of what sort of made us good, then let's go back to there and start driving. Trying to close that gap, focus on what's happening, and probably playing off the fact that in Aviv they sort of stalled a little bit. I think if you think about the fact they went through this process of technology centralization, which probably was not as successful as they had hoped. And if you've been into any company, and we tried this way back in the day at the REA Group, when you start doing big technology projects, the organization tends to focus inward. And the problem is the competitors aren't internal, they're external. But what happens is you start having internal competitors because you're saying, well, I'm Seleger, I want to have this functionality in the website. I'm ImmoWeb, I want this functionality on the platform. I'm someone else, I want that functionality. Everyone starts to compete
Too
for,
many cooks spoil the broth.
yeah, well, in some ways, not so much that is they're all competing for oxygen on the technology roadmap. And to get that technology, to get that oxygen means that something's got to give. So everyone's then focused internally. And the problem is the competitors go, great, thank you. I'm just going to keep doing what I'm doing, which is serving the customer. And last time I looked, there are no customers inside the house. All the customers are outside the building. So if you lose a little focus along the way, people like Bianessi and so on can creep up on you, close that gap, and become real competitors. When at the end of the day, they should have been a long way behind.
Absolutely. I mean,
So this is definitely one to watch because it could be a very good case study.
think it's fair to say that that maybe market leadership is sort of up for grabs in France in certain ways. And when we start thinking about how we define what market leadership is, this reminds us of the talk that Omar gave at our October conference where he says leadership is local, right? During his comments, David Ben Basset said that like in around 50 territories in France, they're already a number one in terms of listings or agencies. So this is already a robust business that has built a nice market leadership position in certain parts of the country. It's now how do we want to define what a real true market leader is? A couple of numbers before we move on. They grew its traffic by 20% in the last 12 months, Bianessi, as well as growing the team size and its revenue despite a flat real estate market in France. So basically, some nice noises coming out of Bianessi, but one to watch. We will move on and we will go over to Switzerland.
Actually, wait.
Go on
Jump in
then.
here, right? No. I think because we were having a chat the other day about key themes for 2026. While online marketplaces or PPW, however you want to think about it, reports news. What's happening with Zillow, for example. We have lots of interviews with super cool people about what they're doing. And we also give you some opinions and reports on what's happening on the market. And one of the reasons Ed's not with us today is he is, I was going to say knee deep, he's neck deep in doing some data and analysis that's looking pretty cool about AI, which we'll start to share with everyone shortly. One of the key themes we've got for next year, apart from AI and innovation and so on, is local leadership and the importance of it. And one of the things we're going to do two things around that. We're going to look at who's doing well in markets and how and why are they doing well. Okay, and that's sort of the first thing. The second thing is we're going to look at expansion failures. Right, I think that's a good topic. And we were chatting the other day about companies who have expanded outside of their home territory by acquiring businesses and then selling them. And one example is when REA used to have a share in Property Finder in Dubai, owned 51% of what's now a multi-billion-dollar business, and sold it back to the owner for literally less than $1 million. Okay, now that's sort of like an investment that didn't go well, and then it's like, well, why? Right? Because it's an obvious thing. And then there's leadership in other dimensions. It's things like in moving into CRM systems and so on. And a good example of that we'll look at, and I'll just use Domain just to be equal in this conversation, is where they acquired My Desktop, which was the market leading CRM player in Australia. And they ended up selling it for a lot less than they paid for it to a company called the PropTech Group. Okay, and why? Because they were focused. One was that there was lack of focus and kind of marketing business really run a CRM business at the same time, and so on. So we thought next year we're going to play out a number of these scenarios, take a look into history, and hopefully provide some lessons of what's gone right and what has not gone so right over time. So that was my thought about this local leadership type thing. And then the other aspect about local leadership is, because you operate in a market, let's say France, if you happen to dominate Paris, right, but lose everywhere else, are you a leader or a challenger? And the answer is it could be either way, right? Depending on how you define the market. So you don't have to be successful in every single market, but you want to be successful in the most valuable markets is the way to think about it. Which goes back to, for those who were at the Madrid conference, the presentation done by the Properbird guys.
Absolutely.
Who were talking about how Domain could potentially take on realestate.com.au in Australia, which is all about identify, their core message to the group was identify those markets those markets being suburbs or groups of suburbs in Australia where it's highly valuable. So if you are the leader, you're going to make good money, right? There are markets, clearly you could be the leader and you're not going to make any money because they're too small, or the housing stock is undervalued, or there's not enough transactions flowing and so on. Okay. And then where you also have a historic reason to be there. So in this case, for Domain was, you've got Domain as a brand is 30 plus years old. So there's latency in that brand and the strength of the brand in certain markets. For example, the eastern suburbs of Sydney. And Domain leveraged that historic latency to refine its leadership. But let's just pick eastern suburbs of Sydney. Let's absolutely nail that suburb. It's high value real estate. The agents have got a lot of money, so they can spend those high amounts. And you've got a brand that has historically been very, very strong. And you were the leader there. And that's there's another angle to lead. Anyway, bottom line is we're going to have fun next year about talking to people about what it means to be a local leader.
I think BNEC can use that template that Omar shared on stage, right? They've already got 50 market leadership spots around the country. Replicate that on a more granular level. You might become a market leader without necessarily having what you'd call vanity metrics, but you can start taking over little parts of the country, divide and conquer, and go that way. Anyway, we look forward to watching BNEC's growth in the next few years and hopefully keep it interesting. They actually do make it to market leadership and we can cover it for free on online marketplaces. Right, then let's move on to Switzerland. We have a company that recently floated. Swiss Marketplace Group is now a public company, and barely a month after going public, they've made their first acquisition. So this is a dedicated lead seller or seller lead platform called Immoverkauf24. It's been added to the Swiss Marketplace Group portfolio, which already has at least a dozen companies operating in Switzerland. Simon, the question I have here is you've just gone public, you've raised some money. Do you have to do an investment and acquisition as a statement of intent to show we are going to look forward and invest our shareholders' interest in this business into new revenue opportunities? Or can't you just keep the powder dry?
Well, I think you've got a few realities here. First of all, you've raised money, so that's great. Second is you listed on. I'm just checking the share price here. The 19th of September. So what is that? September, October, 2 months ago, 60
Pretty
days,
much.
right? And you listed at basically 50 Swiss francs, and you're now at 33 Swiss francs. You've lost a third of your value. Okay, so now you have a problem. Okay, you've come out of the blocks. We're going to be listed. We're going to create value for our shareholders, et cetera, et cetera, et cetera. Those who bought shares at the listing, or those who bought shares pretty much after the listing, because it basically trundled along at 45 to 47 Swiss francs until a month ago. And since then, it's dropped as low as 28. Yeah, almost halving its price. So clearly, if you're a shareholder who's come in early, or not even early, since listing in the first month, you now have a theoretical loss of 30 odd percent of whatever you've invested. That's not a good start for any company being listed. Let's just be blunt. Yes, it's a 3.5 billion Swiss franc business, so it's not it's peanuts. It's a material business, but you have a problem. So therefore, you've got to then say, okay, what can I do? There's operational growth. So you have sort of three levers. One is, hey, we're going to do all this stuff, right? And you set expectations in the market. Now, people then say, well, I'm going to see how you go. Now, I didn't read the prospectus, so I can't say what was in that, but my hypothesis is there was some forecasts. Their first job is deliver those forecasts. So I think, saying what you're going to do at this point in time doesn't matter. The second is deliver month after month, quarter after quarter, and produce results. Clearly, people are going to be looking at what are the financials for the Swiss Marketplaces Group. So if I'm Christoph Tonini, who's the CEO, I'm probably thinking, okay, what are the good operational metrics that I teach the market to look at? Whether it's average revenue per agent, although they've got Marketplaces Group, they've got cars and a whole bunch of other stuff in there. But I'll just look from the real estate side. What's the average revenue per agent? How's that growing? They've probably got all the agents in Switzerland anyway, so you can only really think about growth of the revenue. So I'd be talking about the upsell of additional products and services to those customers. So you're basically saying, I can get more value from my customer base. And by the way, I'm currently capturing 5% of their commission, of their revenues. And if we look at best practice around the world, market leaders can get 10%. So you're saying there's growth in all of this. So you're basically setting expectations, you're putting in the metrics to track, and you're saying it's possible because other people have done it in other markets. And then the other thing that you then look at doing is acquisitions. Okay, because I've got, oh my God, I've got to grow this business. Well, how am I going to grow my revenue? I could too. I can operationally grow it, or I can acquire another business and add its revenues into my revenues in the process. So that's sort of what's doing. So if I'm them, yes, I'm going to be looking at acquisitions. I want to deploy my capital. I can use also my shares as currency to acquire another business. So I think all in all, they're doing what you would expect, but they've got a problem, right? They've basically got to double their 50% growth in their share price just to get back to where they were. And that's what they've got to do.
I mean, does the first 2 months of SMG being public perhaps shine a light on why somebody like the Dubizzle Group decided to postpone their IPO because they had forecasted that their share price would potentially go through the exact same slump immediately after coming in, and then they'd have to work extra hard just to come back to where they were in the start place.
Absolutely. That is the problem that you create in this whole process. Is if you do list and you do get on that little slippery slope, it's hard to get back in the short term. You have to seriously outperform expectations to get back. And I think that's where I think the interesting challenge will be for Swiss Marketplaces Group. And I think, probably, and in hindsight, you've got, so the problem is the following, right? If you're the Dibizzle Group, you've got people who have been shareholders for 10 years, 12 years, right? And they want a liquidity event. They want to somehow take that 12 years of shareholding and convert it. And I've spoken to some of them, some of those shareholders, and they were a little bit disappointed, put it bluntly, that they didn't list, because now they're still locked up as a shareholder in an unlisted company, where you can't buy the shares unless you find someone who wants to buy the shares off market. So that's the downside of not listing the business. The upside, of course, is if you had listed the business and people had been locked up. So often you have management or founders locked up for, say, 3 months. Then they would be sitting not on a 50, in this case, not on a 50 Swiss franc share price, would be sitting on a 33. They would have lost a third of their value, and they can't do anything about it. I'm locked up. I am, damn, right? And then they become unlocked maybe after 6 months or 12 months, or sometimes in Australia we were locked up for 2 years. Okay. And all those who were not locked up at least got out. I mean, my guess is what's happened is a whole bunch of people who had shares from a long time ago dumped those shares once listed at that sort of 50 to 45 to 50 Swiss franc. And then, they got a whole bunch of new shareholders. Now, the new shareholders who come on board are very different. They're not long-term. They're players in the market. Can I get my yield? Can I get my dividend? Or can I, get a good capital gain? If not, I'll sell the share, go to something else. And they're not long-term supportive shareholders. Quite often, this is how you get played. So yeah, so back to your original question, the Dibizzle Group probably, in hindsight, dodged a bullet. But the question is, should they have been on the firing range anyway?
Nice analogy, Simon Baker. Right, a couple of little tiny bits of context before we move on to our next segment. The financial details of the SMG, Swiss Marketplaces Group acquisition, were not disclosed, but the company said the transaction is small relative to SMG's overall business. Martin Weber, managing director of SMG Real Estate, said, "We're adding another piece to our platform portfolio. It fits seamlessly into our strategy of providing real estate agents with the best digital tools from lead generation to successful closing." Right then, we are 32 minutes in, ladies and gentlemen, and it's time for those of you who are not interested in Zillow to close the podcast.
No.
No, you have to stay. You have to stay.
Or just fast forward a little bit. Right?
Just fast forward a little bit. Okay.
You don't have to. We're not on TV show and live, Harvey.
Yeah,
I know.
I keep forgetting about that.
Forward.
Okay.
I know.
You can skip. To be fair, this is actually the last segment we have of the show. So if you can fast forward all the way to the end where I say goodbye from him and he says goodbye from me and so on and so forth. If that's the
Anyway,
highlight of your podcast listening week.
Let's get on to Zillow.
Right, let's get on to Zillow. So Zillow in a nutshell. So there's an injunction last week between Compass, who say that Zillow's listing ban is an abuse of monopoly and shouldn't be allowed to go ahead. Executives from both companies, from Compass and Zillow, both testified. There's an interesting document been released, a strategically sensitive document by Zillow, which I wrote up news for earlier this week. I won't go through the rigmarole of it now, but basically there are a couple of hardline tactics that Zillow were willing to leverage in order to ensure people stayed on side in what Zillow wanted to be going on. Now, Mike Del Preti has done a fantastic piece of analysis AIM Group's also done a piece of analysis. We've done a minor piece of analysis, our own. Some people say Zillow came out of it looking good. Some people say Compass came out of it looking good. It saw just typical he said, she said in the courts. A couple of other things that we need to know about Zillow. Last week, they got sued for the 6th time in 6 months. And this time, the target was Zillow's home loans segment. The lawsuit was filed at the start of last week and was amended about 72 hours later with some eyewitness testimony from customers, from agents who basically twisted the knife on Zillow and said, they came into our offices, they didn't want a paper trail, they're bullying us into directing consumers towards Zillow Home Loans. Otherwise, they're not going to let us have our listings visible on Zillow's platform anymore. And there is also a potential updated number on the Zillow versus CoStar copyright infringement lawsuit. The headline said $1 billion in damages. Word on the street says that there may be a $400 million, what you'd say, baseline for this lawsuit, and it could still reach as high as $1 billion or more, depending on how you value a copyrighted image inside your portal, which is where I want to bring you in, Simon Baker. How on earth do you put a financial value on a copyrighted image, and then when someone steals it or borrows it without permission, as in this lawsuit?
Let's call it uses it. Let's just say
uses it. Let's just say uses it. How do you say this is worth $5,000, $10,000, $50,000?
Jeez.
Who knows?
I think the it's a hard one, right? I mean, I think first of all, how much is the image really worth? Not as much as anyone says it's really worth, because it's if you think about it, what makes a portal valuable? It's listings. First, and a listing is made up of location, text, price, images, yes, and clearly they're very important because you need to see what you're buying. Virtual tours and so on, right? There's many things that make up a listing, but a listing is the base. The image, it's not like an image in the listing, it's the listing has images. And what makes a portal really valuable is having lots of listings that are of quality, i.e. on market, with all the information that you need to have around them. So that's in, thinking about from a portal perspective. Now, clearly, I'm not thinking about it from a US litigation perspective. And I'm certainly not thinking about it with punitive damages thrown on top, because they always love to do punitive damages and so on. But my guess is, if you're taking a step back, if you're Zillow and you've got 6 of these lawsuits running around from everyone from Compass, who I thought was your customer, okay, in this whole process, yes, you're going to get sued by competitors, and you're going to get sued by governments for perceived wrongdoing and so on, because you are a big company, you spend a lot on marketing, you're seen as a market leader, and you become a prime target for someone's anger because something has gone wrong. That's part and parcel of doing business. But if you do have 6 of these things, they say there's no smoke without fire. Okay, something is not right. Okay, that you have a lot of these. I've never heard of any other portal business in this industry anywhere in the world being sued this much. Okay,
From 6 different directions as well. That's what's very interesting. This isn't 6 people doing this. This isn't 6 times 1. It's 1 times 6.
Times 6.
And there's a lot of microscopes being put on different parts of Zillow's businesses, and that's where it looks bad for the business. I think is that it looks like there's maybe a lack of control, perhaps, over what they're doing and how they're going about it. Perhaps it's tough to say, right?
I don't know, right? I can hypothesize so that all the following is an editorial comment with my opinion only.
Of course.
But I would think that if you've got 6 different legal cases going on board from 6 different directions, everything from Compass to governments to CoStar to whomever, right, suing you.
Yeah, a couple of private lawsuits
and
as well.
private ones as well. And there's probably people who are going online and using that Zillow
litigation.
Zitiigation app for a laugh. But putting that to one side, you only get to this point when you're probably doing things to annoy someone. Now, at the end of the day, we're running property portals. We're just helping people find homes. So why it's not, I can't see why it's contentious. You're not making pharmaceutical drugs that could potentially kill someone, right? You're not doing
that we know
things
of.
that are, I mean, clearly, right? But so I think in all of this, there must be something at play in terms of the culture of the organization that's led to sort of playing fast and loose with whatever. And so I would just be saying, where there's smoke, there's fire. There's got to be something happening. And you've talked about emails being released, that people are doing analysis around all of this and so on. I just think that something doesn't look right, doesn't feel right, and I think it's and you can't. It's super unlikely you're going to win 6 out of 6, right? You're not going to do 6 legal cases as a defendant, right? You are the defendant in 6 cases, and you're not going to win 6 out of 6. Maybe you win 1, maybe you win 2. But the other 4 are probably going to have big numbers attached to them.
Well, that's the thing, is that how do you define winning and losing a lawsuit? Because Zillow might find a slap on the wrist and a fine a win in some cases, even though technically they've been found guilty of certain alleged charges. So it's going to be difficult to define what winning and losing is for Zillow until we've got judgments for all 6 lawsuits, which, let's face it, that's going to be 3.5 years of headlines before we get to anything.
I'll give you a good instance. I got a friend of mine in a totally different industry. It's med tech, and he's doing some litigation at the moment. He's a relatively small company against a large company. He's the plaintiff, not the defendant, and he's been in the courts in the US running this case for, I think it's 5 years now. Okay, and they still haven't got to summary judgments and so on. Because if you're the defendant, you will find ways to make this
Slow
last
it down
as long as possible, right? You'll find reasons to say, there should be a summary dismissal of this for this reason, and the judge has to go off and think about it. And also, you have to realize that you're dealing with judges who are not experts in property portals, right? They understand business because that's what they specialize in from a legal perspective, because they're corporate, acting in the corporate type space. So this is going to be the gift that keeps on giving for you, Harvey. Okay, because there'll be news trickling out about this for ages, and so it'll go quiet for a while, then it'll come back as the next hearing and so on. Although I was reading, maybe it was one of the internal conversations we were having, that the ones brought on by the government are likely to be prioritized because the government has the capacity to run the system. The government sues you. Oh, and by the way, we run the system that you're going to have to be judged by. And we're going to make sure you go to the front of the list to be judged. So I think in that case, we will probably, won't be years, it might be 18 months or
if we could have all 6 done by the end of 2028, I'll take that right now.
It won't be. I will be very happy to place a friendly wager on that one. It just, some of this stuff is going to be just,
it never works out that way, does it?
No.
Right then, we're at 42 minutes and we've got 2 very quick sets of financials to give you. We've got Prosus. Prosus, part of, was that Naspers? Naspers, Prosus? Is it Naspers then Prosus, Prosus then Naspers? Doesn't matter. They had a good half year. They had a good half year for the first 6 months of 2026, and Prosus operates OLX. OLX has real estate marketplaces all over the shop. We've got Romania, Poland, there's Brazil. Do they still own Brazil?
Yep. I think it's a 50-50 joint venture.
Okay. Anyway, Prosus. Real estate revenue showed strong growth in the first 6 months of 2026. Revenue up 26% to $92 million for the period. Real estate adjusted EBITDA margin increased to 45% for the period. So good stuff from Prosus. And in Russia, we have Cian, a massive dedicated real estate specialist. Total revenues up 29% year on year for Cian. Adjusted EBITDA $13.9 million, up 128% year on year. There's a couple of different numbers that led to that essentially doubling. And we've got an adjusted EBITDA margin of 28%, which is up 12% year on year with a profit of $13.9 million also. That's up 45%. So we got some good recovery in Russia and Prosus, which is just a massive business. This is a
Yes.
multi-billion dollar business
Yeah.
continuing
Right. So
its solid growth across the way.
OLX Brazil, 50-50 joint venture, Prosus and Adavinta.
There you have it. Okay, so
There you
we've
go.
got OLX worldwide, then we've got Immo Virtual in Portugal, Sodom in Poland, Storia in Romania, Property24 in South Africa, and then you've got autos classifieds as well. You've got Autovit in Romania, Auto Trader South Africa, Otto in Poland, and Stand Virtual in Portugal. This is a vast conglomerate of businesses. It would be interesting, Simon, to see if Prosus is at all interested in doing the Adavinta thing of selling off some of its marketplaces and saying, okay, we're just going to be an auto specialist or a real estate specialist in 5-10 years time, because it's a big bitty business with lots of moving parts.
Yeah, well,
Anything to add
we
on
have
Prosus and Cian,
no,
Simon?
no, 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 no. I think they're both. I mean, at the end of the day, from financial performance, good results by both of them. Clearly, with Cian, that's focused on one market only. Yeah, this is once again, this is a good advertisement for those who focus on what they're doing. They can have very good results, and especially in tough markets to operate for various reasons. And clearly with Prosus, and more importantly, you'd have to look at each of the individual players within that group to get a really good feeling. But overall numbers, you'd be very happy, right? With that sort of organization. So overall, well done to both of them. And I think we're in this interesting phase where I think a lot of companies will have next year some very good results coming through. And it's probably because they have found ways to apply AI, so thus keep their costs under control. You'll probably see, my hypothesis is, you'll see a continued growth of the market leaders. You'll see a continued growth in their revenue line, and their expense line will plateau, if not drop a little bit, so their margins will get better over time. I think a number of the challenger brands will move from either marginal profitability to more profitability, or loss making to profitability, as they apply AI technology around it. So I think then, and funnily enough, I was talking to a gentleman called PropTech Jobs. Okay, I thought I'd do. I'm not an investor or anything, but I was having a chat to him because he said, "Look, I'm starting a PropTech specific job agency or job site for the industry, because the industry is now big enough, got enough players in it, and it makes a lot of sense to allow people to not only move within a market, but within markets, between markets, I should say, looking for PropTech jobs. So keep an eye out for that site coming soon, if it's not already launched. What's his name? Thierry, I think it is. And so, I think, because I hate to say this, but if AI is being applied to a lot of businesses, there might be a few jobs that are either not, no longer needed.
So we've had an advertisement for Apple iPods and PropTech Jobs, and
yes.
two
By the
conferences
way,
on the conference today. I mean, we're just
yes,
advertising central today. Is there anything else you want to get off
yes.
your chest, Simon, before we get out of here? We're about 45 minutes now.
Yes, one last thing. We
Go on then.
have a WhatsApp chat. So for those who are wanting to know what is happening, getting the news to your WhatsApp feed straight away, join the online marketplaces WhatsApp chat. If you don't know how to find it, it'll either be on the website. We'll put it in the show notes for this, or you can send me an email at simon@onlinemarketplaces.com, and we will just send you a link and you can join the WhatsApp chat. We've got, I think, about 500 people on there already. And we tend to not only put out every article that we publish, we put a link to it so that you don't actually have to go to the website to see it. You can sort of click there from your WhatsApp. We also put out special offers for conferences. Okay.
Where do people need to go to find tickets for the Bangkok conference, Simon?
Bangkok again, www.ppwapac.com.
There it
There
is.
we
It
go.
is a real website, ladies and gentlemen, and
It is
those
a real
tickets are
website.
only going to get
Awesome.
more expensive. That's why
Of
you
course.
need to move fast. Right then, I think
Yes.
we're going to leave it there for this week's news roundup. It's been good playing some tennis with you, Simon. It's goodbye from me.
Do we need that Ed guy? Do we really?
We never did. That's the
No,
secret.
that's very true. But don't tell him.
Fortunately, no one else can hear this conversation we're having right now.
No.
Right then, ladies and gentlemen, it is goodbye from Simon Baker.
And it's goodbye from him.
It's going to be goodbye from me. Thanks for joining us, and we will see you on the next one. Bye-bye.
Bye-bye.